Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. I hope you're having a fantastic day, taking a look here at Bitcoin, seeing what's going on. It's like this bearish rectangle is working out the way that it should. And that's just common when you see a previous support level. We can see the 62K range in the past is held very strong. So it's going to take a little bit more to get into that, to break into it. But you can see here with this extra volume here when the market opened, this local point of control at about 62,000, losing that level generally implies it's going to be the new resistance. So we can presume the price, if it recovers, will reject off that and continue lower. Again, that's just a presumption, it's not a guarantee, but everything here so far from the bird's eye view looks like it wants to come down. There's other reasons too that I want to kind of describe here so you can kind of see it. So thanks again to everyone who's been liking the videos, commenting below. Deeply appreciate that. Thank you so much. And if you're new to the channel, CryptoCash.tech is a site if you want to become a better trader. I have a trading academy, community, and signals group. We did just take profits on recent short position with ICP, 21% in roughly 24 hours. So again, when you take trades with altcoins, folks, make sure you understand what's going on with Bitcoin. It's really important. We take a look here, though, from a liquidation standpoint. Bitcoin is in trouble. We have tons of liquidation here. Every one of these red bars is roughly $2 billion, plus or minus half a billion. It's a lot of money no matter how you look at it. And this is just liquidation events. In other words, a lot of longs are heavy at 61K. Their entry isn't 61K. That is basically their stop loss and or liquidation event that will occur if they essentially hit that liquidation level. Okay. In other words, these are probably the higher leverage longs that are totally screwing everyone else over. Okay. Again, so you got to recognize that the higher the leverage, the more target you have on your back, right? Because that's why these aggressive candle wicks come up and come down for a reason. Like this most recent candle wick just swept $2 billion as if it never happened, right? It's like, okay, dang it, start over, right? Hit the old reset button. Well, the key takeaway of looking at this here is to ensure that you don't have to hit the reset button. You understand what everyone else is doing and what they're doing wrong. Again, not to say it's wrong to take a long at 62K, it just doesn't seem to make a ton of sense when there's tons of bearish divergences on the chart and everyone else and their dog is essentially trying to take a long right here. So it just makes very little sense to me. Even though we actually technically have more shorts in the market than we do longs, a lot of the shorts are way further away than the longs are. Longs are much closer, okay? We zoom in here a little bit, we can kind of see on the monthly. Again, maybe about, I would say, 10 to 20 billion between here and 61K. And then 60,000 has roughly another 10 to 20 billion for that range too. It gets really heavy as soon as we break down under 60K. So there's a solid chance we're going to run if we hit 60K again and break that level. We may see a macro double bottom, but if that level doesn't hold, I think 57K seems probable. These are $10 billion bars right here. Okay, that's a lot. Okay, and then just to clarify too, just so you understand, we're at about 1.5 for our delta with liquidation shorts. So we do technically still have more shorts in the market right now over the last 5 trading days than we do before. Okay, so people are shorting more, which makes sense because we're really close to a lot of liquidation events, and Bitcoin is really having some difficulty getting any higher. But again, it's also holding very strong at 62,000, that support range. We can kind of see here, this is really hard to kind of identify, but based on, open interest and all those other factors here, you can kind of see 62,000, 62.5. Those are those two heavy concentrations of where people are mostly interested in taking a position. So what does that tell us? Well, it tells us we are in a good support range, even still, right? We take a look here, we can see a lot of support right here. Should continue to hold. But man, I can tell you, the more you test a support level, the more likely it is to break. And in this case here, we've tested 1, 2, 3, 4, 5, 6, 7, maybe 8 times now. I don't know, I just think that the price is going to drop here soon. But once more, that's just based on everything here. The great thing and the terrible thing about the market and the market makers and what they do is they get you convinced that the price is going to break either bearish or bullish, and then they go the opposite direction. But generally speaking, they'll go in the direction of liquidation, which again, we have a lot below the price. And even though there is still a lot of liquidation to the upside, it's much further away. Okay, we're talking like 63.5, 64K is even just the local shorts here. So shorts are absolutely in profit, and that's a good sign, again, for consideration for another short. However, we got to recognize too here, let me go ahead and clean this up a little bit. We do have a double doji candle kind of situation forming here. Generally, when you see double doji candles, you are going to see a reversal. Okay, so we could very well see this just be the calm before the storm and the price takes off too. All right, so just kind of throwing it out there. That's both realities are possible. Okay, so we don't want to get too crazy with your positions. I think if we can't close above the 62,000 range sometime today, or 62K or higher, then there's a solid chance we're going to go lower. Again, I like to wait for daily candlestick closures, just kind of give me some confirmation. We're treading water right here at the 50-day SMA, or sorry, that's the RSI at 50. Money flow index is below the price action. I've talked about that being a bearish type of divergence. So I'm sure some people are getting some red flags or some red dots or whatever. Basically, this is not necessarily a sell signal, but this is a consideration to recognize that the momentum has absolutely shifted. So I don't like to see the money flow index below the RSI. That generally implies bearish divergence. We can see here trend strength index is below zero as per usual. MACD is still kind of diverging. It's losing its momentum to the downside. That's normal as you continue to range bound, but generally not favorable either. Take a look here at our SMAs. We got some SMAs down as low as about 60.5, 61K. So that's why I talked about this previously being 60,000, like 60 to 61K being a range of where the price action should go next. I initially said 61,000 just kind of a starting point because we got some previous closures and of course just kind of that little support range. But it's absolutely true. Definitely we could see the price action continue much lower below 60K. And once again, from a liquidation perspective, 57,000 is a pretty huge number. So we break and or close below 60K in the next few days, next couple weeks. Whenever that happens, we very well could see that be very bad. That could be a very bad situation. Keep in mind too, though, if we do retest that area, we could see a double bottom, right? That very well could be a nice support range. 60,000 held like a champ here recently, so I wouldn't get too crazy, but we get closer to 60K, it's probably pretty safe to presume that it could break to the downside. This is not a very good doji candle here forming so far. That is technically, even though it's red right now, that's somewhat of a bullish sign, implying that the price action couldn't go any lower in this period. Keep in mind, we got 45 minutes left roughly in this candle, so really too early to tell. But the 4-hour time frame, if we lose the 50-day SMA, I think that we're more likely to continue lower than higher. Once again, that 20-day SMA kind of holding above the price action there. So that kind of reaffirms, again, 63,000, that really close approximate of, resistance is holding strong, right? So the price action came up to retest that level, pulled back, pretty much doing exactly what we expected it to do. Because when it came down to the 62K range, I told people wait to short until it gets up to 63K. A lot of folks got in at 63, and at this point here, it just looks like we're going to continue lower. But once more, this is still very premature. I wouldn't get too ahead of yourself, but here's some reasons why a short consideration might be advantageous. We're under 50 on the RSI here on the 4-hour. That's generally unfavorable. That implies we have pretty good divergence and the price is more likely to continue lower. We lost that support, if you will. We can see here as well with the money flow index coming down. It's coming down pretty hard. So there's a lot more selling pressure than buying pressure right now. We can also understand with our MACD, it's still diverging. Nothing has changed here. We got good momentum to the downside. And again, momentum has something to do with the price action. I wouldn't say it's like a guarantee per se, but it's absolutely something that we need to be mindful of. Our trend strength indicators, everything's kind of shifting to the downside, right? What we probably want to look at here too and just kind of pay attention to, because it's not going to be an exact science by any stretch, but a lot of times when you draw out trend lines, you can kind of pay closer attention to what's going on in the overall sense. And we're still respecting this descending trend, right? And again, this is a smaller term trend line. I'll clean up the charts. I'll post a playout chart on our Twitter, Telegram, and Discord. But the general consensus here is this range-bound activity for a bearish rectangle. Okay, that's what broke down. And if you caught my analysis from yesterday for Bitcoin, I kind of mentioned that this bearish rectangle is likely to break to the downside, right? And in that sense, it did, of course. But the reason why is just because it originated from the upside, and there is so much selling pressure here at about 62.6/63,000. That macro point of control, it just makes sense to either short that area or consider altcoin shorts as well. No matter how you look at it, the reason I'm bringing this up here is that there's a lot of confluence at this upper range, and more important here, this descending trend line. While it's brief and short here at this point, it's kind of small. We need to respect the fact that it's probably more likely to continue lower. Okay. Now again, if we break this descending trend line, does that mean that you just go full on bullish? Not necessarily, no. But you can say when the price action starts to squeeze and kind of compress like it is, we're going to see a breakout in either direction, probably pretty substantial. Okay, and it just makes more sense for the price to want to go down than up, based on a lot of contributing factors. Hourly time frame probably reflects that as well. We're below the cloud. Lagging span is kind of within the price action or getting in there. So it does imply, you probably want to consider securing some profits on a short if you haven't already. We can see, of course, the cloud is consolidating above the price action. So even if the price does break this descending trend, which by the way, it will change depending on the time frame that you're in, we can kind of see here. Let's go ahead and pull that out there perfectly. Okay, cool. Again, that's usually why I like to put post my playout charts after I review the coin, just so you kind of get a little bit more specific and I don't have to worry about that. But the key takeaway here is that we got 2.5 out of 3 reasons why either keeping your short position open for further downside or considering a short now is a good idea. Again, mainly because we got a lot of resistance above us. So majority of timeframes are indicating that bearish divergence is happening. We've got liquidation events reaffirming the fact that the price is more likely to go down. And then on top of all that, we've got this craziness in the world right now with all the war efforts, and the price is more likely to go down than up in light of that, right? So generally speaking, those are fundamental catalysts that are going to be more adversely impacting the price. So I don't know, there just seems like a lot of reasons why we might see the 60K range at the very least retested. We lose that, 57K seems likely. I've already set some limit orders at 57, 58K myself for my spot bag. Anytime the price goes into the 50K range, I just generally like to buy. And that's, again, more so spot. I'm not blindly taking a 100x leverage, a long position or a short position. You should never do that either. It's very irresponsible. Either way, what is responsible is to make sure you do your own due diligence, make sure you're using proper risk tolerance. I talk about that a lot in my trading university. Friendly reminder for those who are in my community, you just make sure you select this university tab, go to our website. We have all those videos available for you. And I just want to say thank you again. So you're all very awesome parts of my life. Deeply appreciate working with you every day, and we'll look forward to seeing the next one. Just be safe out there today. I would, just to kind of summarize here, if we can't close above this local support range at about 62.1, 62.2, then I think there's a solid chance we're going to see the price continue lower. Our point of control here for the last, what is this? This is ever since the 6th, so that's 3 to 4 trading days. We can see is at 62,400. So closing, I would say a short at 62.4 makes a lot of sense, but that's just me spitballing here for the moment. Let's go ahead and review this here again later, see what's going on. Hope you have a good rest of your day. Thanks so much for your time. We'll see you soon.